Okay then guys, so I wanted to make a quick video talking about why you would own Incomeshares or YieldMax, for example. I know that's the American equivalent, but owning a covered call strategy on an underlying stock, essentially you have to think that the stock in the future is going to be worth a lot more than it currently is now, so you have to be bullish on the underlying stock. So for example, with Tesla, there's a 55 basis point expense ratio for all of these funds, apart from the NASDAQ and the S&P ones, because they're ETFs. I think they're a bit less, but today I'm just going to talk about the specific ETPs where they're selling calls on a single stock. So we can see here that they sell up to 5% of out the money weekly call options. So for me, I think that having monthly income is just a lot better than having, let's say, you're owning a stock for a year, nothing's really happened, and then all of a sudden there's new deliverables, information on Tesla. So a lot of the price action around Tesla is based on how many cars it's delivered, and its 10Qs and how well it's actually performed. So you will miss out on some of the appreciation up to the stock price, the strike price, on some of these weekly calls around those times. But normally the premium on the options themselves are higher around them times because people expect a lot of price movement when Tesla announce earnings and deliverables, for example. But essentially I just wanted to make this quick video to say that in a choppy market, yeah, you will get some income as well, and you will probably perform better than the underlying stock itself. But when Tesla, for example, about a month ago, it was very recent how it dropped like 40%, 50%, and you can see that the dividend actually drops quite low with it. So it was 24 cents a share because the stock dropped 40%. So you're not safe from like a market crash, for example. If you want to own this, you think Tesla's going to be worth a lot more in the future. So I just wanted to make that clear, if anyone didn't know, because yeah, there is a little bit of downside protection, but it's only a small amount. The majority of the NAV of this ETP is the underlying stock and how much of it that they own. And also, it's just a lot easier to buy a fraction of this as opposed to selling covered calls yourself, because you would need 100 shares from the start anyway, which is what, like 25 grand, 30 grand, depending on the price. But with the ETP, you're only limited to how much one share costs, and it's like $6, so you can buy $200 worth if you really wanted to. And that's why you would own something like this and pay that expense ratio, because you don't have to deal with that, which is actually quite a good thing. Also, I wanted to talk about the S&P and how volatile that's been, because Trump has spoken about tariffs and obviously there's a mixed reaction. Volatility is just essentially a disagreement that people have. So some people think, it's going to go down more. Some people think it's going to go up. So that's where volatility and like open interest is essentially just disagreement at the end of the day. So in periods like this where, for example, on the 10th, so in 5 days, I'm receiving a dividend from Tesla, but nothing's really happened. It's like gone down a little bit, but I'm actually going to get some dividends and I'm going to reinvest it back in. Or, for example, MicroStrategy, for example, we will see that in the last 3 months, it's down 3%. You know what I mean? So if we actually had the Incomeshares MSTR, we would have performed way better than the actual underlying stock itself. And the implied volatility on MSTR option contracts is insane. So if you think the Coinbase Incomeshares is great, just wait till the MSTR one comes, because the premium is a lot more, and it's actually in a market downturn like stayed strong. Bitcoin is actually pretty, like it's shown signs of being decoupled with the S&P, because that's down a lot, and Bitcoin's actually what, like $84,000 at the time of recording. If we had the MSTR one, it would have been a lot better because we would have been up over these last 3 months. But we're going to get that soon, and that's great. So can't really complain. As you can see, the Tesla one's quite down 3 months quite a bit. But this is 381 pence, so that's £3.81 a share. And I'm receiving £450 of dividend in 5 days, which I'm just going to reinvest back in and average down, because you can see that I bought at what, £7.16 a share. So when I use the dividends to buy back in, that's going to be a lot lower. I don't know exactly what it's going to be, but the average cost of the shares that I bought will get lower and lower if the price of Tesla stays the same or goes down even more. But I think it's going to go up in the future, and I want to be receiving income every month while I think that, as opposed to just having one income and then, you know, the Tesla price is doing what it's doing and it could stay the same for 6 months. And that's probably my biggest thing that I don't want to see happen. So yeah, I just want to explain why you would actually purchase something like this. That's it, guys. If you've watched this far, that's great. If you want to talk more about it, drop a comment. I will discuss with you, actually, as I actually like talking about this and discussing it. Thanks for watching. Take care.